Welcome to Shark Cap Table Fast, the 1-minute deal maker that helps you keep your arms and legs. I'm going to show you how to structure a capital raise by manipulating these 8 spin buttons contained in the yellow and the brown and the green and the light purple section. We're also then going to see what happens to the 4 metrics, the ownership stakes, the I multiple, the internal rate of return, and voting control. Without further ado, let's make a deal. Let's say, for example, you have $15,000 of actual cash that you have put in your deal. Let's assume that you have additional valuation, good resumes, maybe some early revenues. You could have intellectual property, patents, trademarks. You could have a terrific website. So let's put $350,000 in. Now you have a founder valuation of $365,000. Let's issue 1,000,000 shares to the founders as a group. Now, investors like to see an option pool as a percentage of the shares held by founders. So let's give it 15%. And by the way, the bigger this number gets, the more it dilutes your position. Investors like to see this number really big to protect their position. They can always get a really heavy honcho to run the company, and you've already reserved options that do not dilute the investor. So, the next question is what will the investor think of your company before they put any money in? In other words, do they think you're really worth 365? Almost never will they agree with you because it's in their best interests not to. The smaller this number, the smaller the the larger the investor stake. Now, and I'll show you that in a minute. Let's go for $250,000. So we've just dialed in $250,000, and we think in year 4 we will be able to sell this business for $2 million. Now, let's see what kind of a deal we've made. First, we can, of course, always look at the red to get a rough idea if we have numbers that are reasonable. Let's look first at the I multiple. 3.64 for the investor. The internal rate of return is 38.1, both of which are modestly okay. The good part is that when you see green, that means the founder has voting control. Now, if you see red, it means the investor has, and if you see yellow, it means you're both sharing on a 50-50 deal. Let's take a quick look at ownership stakes. Options own 7.1% by virtue of the fact that they have 150,000 shares. The founder owns 47% by virtue of the fact he has 1,000,000 shares. The investor owns 45.5% by virtue of them owning 958,333 shares. Now, let's assume that this deal is a workable deal. One more interesting thing. We provide an investment summary which takes the critical numbers that we have generated in this model and it puts them into a couple of sentences which are grammatically correct. You can take this yellow section and you can paste it into your business plan or a pitch deck. Now, one more quick thing. At the bottom here we have 3 red tabs. We've been working with the green tab, which is Shark Cap Table Fast. And by the way, fast communicates with light. This data is not lost. In fact, this data, you will see it in the Shark Cap Table light. We use light to further detail components. Also, we give you powerful capitalization tables. We give you a pitch maker, which creates a much larger version of what you see here in the yellow. Terrific for your business plan or stand and deliver. And importantly, we give you a strategy to reduce the ownership stake of the investors and yet still give them a good rate of return. We give you 2 types of royalties to affect that. One is a plain gross sales royalty, and the other is a preferential royalty. We will detail how those all work in another video entitled Shark Cap Table Light. For now, this is how you make a deal. Thank you very much. Good luck. Let us hear from you. We want to hear about your successes. Bye-bye.